Hey everyone, welcome back. My name is Zain and today we'll be having a look at some of the latest news in the crypto community and financial services. And this is big news in regards to UK Bitcoin holders. So before we continue, allow me to declare that this video is not financial advice. It's strictly for educational purposes. Now, if this is your first time on this channel, welcome. And if you're already subscribed to this channel, welcome back. So let's get this thing started. Financial regulators have ordered shutdown of all Bitcoin ATMs in the UK. Like I said, this is big news for us UK residents, especially if you're holding Bitcoin or any other cryptocurrencies. This could affect us in various ways. Now it says here the Financial Conduct Authority in the UK has told operators of crypto cashpoints to shut their machines down. And this is really recent. This article was published yesterday, the 11th of March. So naturally, we have a lot of questions. Now, with this statement being said, they also said that these companies with these machines could face enforcement actions per statement released today. So the FCA added that cryptocurrency ATMs offer crypto exchange services must be registered with the FCA and also must comply with the UK's money laundering regulations. So none of the crypto assets firm registered with us have been offered. So here's a quote from the FCA. None of the crypto asset firms registered with us has been approved to offer crypto ATM services, meaning that many of them operating in the UK are doing so illegally and consumers should not be using them. That is insane. That is wild. This is quite intense. So they further added that we are concerned about cryptocurrency ATMs operating in the UK and will therefore be contacting the operators, instructing that the machines should be shut down or face further actions. Now, as for ATM, cryptocurrency, and the FCA, according to Coin ATM Radar, a website that tracks cryptocurrency ATMs around the world, a total of 81 cryptocurrency ATM currently exist in the UK. 81. So more than 50 of these machines are located in London. Holy crap. With Birmingham coming in second and 9 cryptocurrency ATMs. So on a global scale, the UK just makes it into the top 10 countries in the world by cryptocurrency ATM counts. So the FCA most recent warning on cryptocurrency ATMs is just the latest in a series of crackdown relating to broader cryptocurrency industry. Now, in January last year, the FCA issued a list of 5 concerns consumers should be aware of when dealing with cryptocurrency, which relates to consumer protection, price volatility, and misleading marketing material. The FCA also added that if consumers invest in these types of products, they should be prepared to lose all their money. This warning was again reiterated in September 2021 by FCA CEO Nikhil Rathi. The FCA also concerned over specific firms in the crypto industry, including its largest exchange, Binance. The regulator previously told Decrypt it has a huge issue with Binance's apparent lack of headquarters, and in September last year said Binance UK entity was not capable of being regulated after it reportedly failed to provide basic information to the regulator. Is it just me? But I think this is absolutely wild. I think this is one of the first steps that the UK has taken to crack down on cryptocurrency. The real question is, where is it going to go from here? Now, obviously, these crackdowns are just going to get more severe until the UK find a good use for crypto or a way for them to regulate or profit from crypto. So in other news, a $4 billion hedge fund is shorting Tether stablecoin. I find this particularly interesting because Tether is a stablecoin. You know, it's a cryptocurrency that it's not really made for profit. It's supposed to keep your money as stable as possible with low volatility. But the funny thing is I've used stablecoins and I've realized that the more money you have in stablecoin is the more volatility you'll experience. So even though it's only going up in the smallest of percentages, you still see a huge impact if you have, say, like 1,000 or 100,000 or millions or being held in these stablecoins. You're affected quite a lot, even though it's supposed to be as stable as possible. So Fir Tree Capital Management is shorting the stablecoin Tether amid regulator scrutiny and fears over ties to the Chinese debt market. Fir Tree Capital Management, a $4 billion hedge fund, is shorting Tether as the largest stablecoin in cryptocurrency faces down scrutiny from regulators. So according to clients of the firm and reported by Bloomberg, Fir Tree has conducted a way to short Tether in a asymmetric trade. In other words, the risk is minimized and the potential to generate profit, the firm's client reported, remains extremely high. So the hedge fund has already reported betting that its decision could generate a profit within 12 months. The firm's concerns center around the stablecoin provides $24 billion in a high-yield consumer paper, which the firm also believes is linked to Chinese real estate developers. Chinese real estate developers facing down a debt of its own, led by Chinese Evergrande, whose liabilities exceed $300 billion in December 2021 when it missed a debt payment deadline. So while Tether, the company, says it does not own any commercial paper linked to Evergrande, Bloomberg reported that Fir Tree expected some of the commercial paper Tether does own will lose value. Additionally, Tether's latest quarterly assurance opinion, published last month, showed a 21% decrease in commercial paper holding over the last financial quarter. And in May last year, Tether released a breakdown of its reserve for the first time since 2014. As of March 2021, the company said almost 76% of stablecoin reserves were held in cash or cash equivalents. Right now, Bitcoin is 39 grand, Ethereum is $2,590. Tether sitting nice and comfortable. So Tether is the third biggest cryptocurrency in the world by market cap. It's the biggest stablecoin in the world by far. And as you can see for yourself, even across the last month, it's relatively stable. You know, there's a lot of volume going in and out, like 60 billion, 65 billion, over 70 billion sometimes, over 80 billion sometimes. Now let's take a look at what Bitcoin is doing in terms of like trade on volumes. It's 32 billion, 27 billion sometimes, 37 billion sometimes. So that's quite interesting. 40 billion sometimes. So that's quite interesting. But again, nowhere close to what Tether is doing on just averaging in the last month or so. And let's go back as far as possible when Bitcoin was like 67 grand. Oh my goodness, that was good times to be alive. Trading volume was just around like 41 billion. So you can see there's clearly more money flowing through Tether than Bitcoin, and Bitcoin is the biggest cryptocurrency in the world, but not by trading volume. By market cap, yes, but not by trading volume. It's quite simple. People use Tether more because it's stable, which means that your chances of your money losing value is lessened because it's stable. It's tried to be as stable as possible. So that's quite interesting. But by market cap, as you can see, Bitcoin is still towering over everyone else. Now, what's quite interesting is that if you look at Bitcoin within the last 7 days, you realize that it's actually been quite interesting when you're looking at some of the charts. Obviously, it's been hovering around a 39 grand for quite some time now. If you look at a month, then you realize that the volatility is extreme. You can see that for yourself. It was as low as 34 grand at one point. That was the 24th of February. But you can clearly see that there are some times when the price is just completely rallied, and then just fell back off and just like corrected itself. And some people just suggest that these are probably just some big whale movements, people moving large amount of money around in the Bitcoin blockchain, in the Bitcoin ecosystem, Now, in other news, the latest crypto side hustle, Discord grinding. A recent investigation by Decrypt uncovered a thriving trade on the work-for-hire platform Fiverr, where people offer to work as a Discord grinder. Discord grinding has emerged as a thriving sub-economy on Fiverr. Some warned that the use of grinders can hurt the integrity of the Web3 project. So the crypto industry is hiring frenzy, with company dangling 6 and 7 figure salary to attract top blockchain talents. But the boom is already extended to the lower strata of the labor market, where people are engaging in a new form of social media engagement known as Discord grinding for as little as $5 an hour. Discord grinding takes its name from the popular platform of the same name, which is beloved by students and gamers, but also became an essential tool for decentralized autonomous organization, aka DAOs. loosely organized communities that come together to build a support crypto project and then often finance their activities with token. So DAO communities on Discord are composed of volunteers and builders who are passionate about a given project. But in recent months, they've also become a place for grinders to make a quick buck by hyping something they not know. So a day in the life, right? A recent investigation would-be Discord grinder post message like, I will offer staff, mods, and be your crypto, gaming, and NFT Discord moderator or manager. And I will interactively chat on your Discord server and NFT chat. Here's a screenshot of some of the recent postings. That's quite interesting, I'd say. So people are offering up their time to interact on your Discord server to help build your Discord server. And in return, you'd pay them. How interested in that? And I think some of the bigger projects in the crypto space will definitely use this to like attract more interest, keep things going smoothly. In other words, manufacturing a good sense of activity in your crypto community. That's quite interesting. And ladies and gents, that's what Discord grinding is. Now, I hope everyone has enjoyed this video. Thank you for watching. Subscribe to see more. And of course, I'll see you in my next video.